Welcome to America's Commercial Real Estate Show, your source for intel, forecasts, and success strategies. Hello, I am Michael Bull, and I'm so glad you are here with us today. Wherever you're catching the show, around the world or around the country, thank you for being with us. We have a great show for you today, and this segment is brought to you by realcrowd.com for commercial real estate crowdfunding. Do check out realcrowd.com. Well, today we're talking about senior housing. My first guest is Beth Mace. She's Chief Economist with NIC, National Investment Center for Senior Housing, and she's joining us on the phone. Beth, thanks for being with us again.
Oh, thank you for having me. I'm really excited to be with you again today, Michael. Thank you.
Well, Beth, as you know, our audience is going to have people that are very interested in senior housing, and they're also in other types of commercial real estate. So just how big is senior housing as a sector today?
In the U.S. right now, we estimate there's probably about 24,000 investment-grade seniors housing and care properties, and they would contain about 3 million units. I estimate the value of that investment-grade seniors housing and care property market to be about $409 billion.
Nice, nice. And it's not big as it's going to be, is it? It's not, when you look at the demographics, I think some people think, well, wow, this is a great time for senior housing, but it's actually going to get bigger, isn't it?
Well, that's definitely the case. Certainly one of the draws for a lot of investors to come into the sector is the demographics. But I'd like to just mention a little bit to your audience that a lot of investors are looking at seniors housing these days, looking at the baby boomers. Mm-hmm. But the baby boomers really are not the current resident of seniors housing today. A baby boomer that was, in 2018, a baby boomer ranges in age today from 54 to 72. And the typical resident for seniors housing is actually, plus 80 years old, maybe about 83. Mm-hmm. So the desirable demographic trends really aren't with us quite yet. If today's resident is, 83, that demographic is growing, but it's not growing at great strides just yet.
Yeah.
If I look forward, the 75-plus cohort today is about 20 million people. By 2025, will be about 29 million people. The 83-plus cohort is 8.5 million people today, and by 2025, will be about 10.2 million.
Yeah. Well, that's interesting. So you think, really, we're about 10 years out till it really grows, and the technology changes so much today, and it seems to be changing faster every year. How is technology changes impacting senior housing?
I think there's a few ways that technology really is affecting seniors housing. One is from an operations perspective. Lead generation is definitely being delivered over the internet. IT systems, big data are allowing senior management to observe real-time changes in the day-to-day performance and operating systems. And then, of course, we have a lot of remote monitoring of residents, and that's starting to generate staff efficiencies. From a health and wellness perspective, increasingly we're seeing telehealth and virtual care systems, and that has the potential to reduce healthcare costs, but also to improve healthcare coverage by allowing, instant video conferencing at call centers with live doctors. We see smartphones and appliances, remote sensors, handheld devices, robotics. There's a lot of technology that's being advanced specifically for senior housing. There's a group at MIT called the MIT Aging Lab, which just focuses on technology for seniors. There's an organization called Aging 2.0, which focuses on developing venture capital for technology applications for seniors. So there's a lot of interest in technology as it will relate to seniors' care and housing.
Yeah, well, that's interesting because I just put, or helped my mother find, don't say put her anywhere, helped her find some senior housing, and it's been a wonderful experience for her, and it's really helped her health and her social life. She really loves it. She didn't like the idea in the beginning at all. Now she loves it. But the reason I bring it up is I was a little disappointed in the lack of technology. I think I expected more, maybe because the technology is used so much around us, especially in commercial real estate. So it's good to see that maybe by the time the baby boomers get there, that we'll have technology kind of in some of these new centers.
Yeah, and I think some of that depends on the operator as well. In terms of, it's probably like you and me and how each of us probably adapt to technology at different levels and at different phases, and that's probably the same case for operators as well. Because there's certainly some operators out there that are fully embracing the technology, especially as it relates to big data and the analysis and interpretation of data and how you can generate greater efficiencies.
Yeah, yeah.
So I agree with you, though. As time goes on, it's definitely going to be more of a factor, especially because there's labor shortages that are emerging in our sector. That technology will help to mitigate that labor shortage, we're hoping, at least to some degree.
Yeah, and labor is a big deal for, I think, all commercial real estate and businesses today. And unemployment rates are historically low, lower than it's been for many, many years. We're starting to see some rate increases. How is labor really impacting senior housing? Is it a big deal for senior housing?
Yeah, labor is very important for seniors housing because it's a very labor-intensive, operationally intensive business. So typically on the expense side, labor and benefits usually sum up to almost like 2/3 of the overall operating expenses for an operator. So it's very significant contribution to the overall expense load for an operator. And we're seeing shortages of labor at all levels, from the executive director level, who's basically like the CEO of the property, to in management positions, and then to the frontline staff as well. So a lot of operators are coming up with some pretty creative plans to try to entice new labor or new staff to come on board, and then new plans on how to retain that staff to keep them in place. From educational offerings that they're providing their staff to, in some cases, educational offerings being provided to staff families to try to draw more potential staff into individual properties. It's pretty exciting at the same time that it's challenging, but exciting in the sense that I think people are being forced to be pretty innovative. Which, if you're on the staff side, it's a good time to be a worker, right? Because with the national employment rate at 3.9%. As I said, it's a great time to be a worker because there's lots of opportunities out there.
Right. And that's one of the risks, I guess, for senior housing. It seems like a pretty safe sector. What are some other risks that investors might want to think about in senior housing?
If we sort of step back a little bit, I think, we're definitely in an interest rate environment that's rising, and that has potential to have an impact certainly on the cost of capital, as well as potentially on valuations and on cap rates. That would be a risk. I think another risk is supply. A lot of concerns about supply, and especially in certain parts of the country where there's fewer barriers to entry. So, for example, a market in Texas, let's say San Antonio, has seen a significant amount of new supply, and it's forced its occupancy rates down into the low 70%. Which will make it challenging for operators to meet their pro formas or for businesses to meet their business plans under that type of a competitive environment. But the flip side is a place like San Jose has seen very little development, and that market is able to see occupancy rates in the mid 90%. Nice. So there has been less supply, for example, in San Jose than in San Antonio, and so it's important to look at specific markets. But in general, if I look nationally, supply is definitely a concern. And as a result, we've seen occupancy rates at the national level drop, and most recently to 88.3% in the first quarter of 2018. And that's down from the most recent peak of 90.2%, which was the fourth quarter of 2014. And that's a result of new supply outstripping new demand.
I see. And how about rates? What do you see for trends there?
When you say what kind of rates?
For income, for NOI growth or top line income growth?
We don't track that data right now, so I can't speak to the NOI data. Although we're in the process of collecting that data, we're not ready to report that information just yet.
Okay, and let's talk about cap rates. As you mentioned, we have expectations of interest rates increasing. And I think in every sector, people are a little concerned to see what the impact on cap rates will be. And we're talking with Beth Mace, and she's Chief Economist with the NIC, National Investment Center for Senior Housing. So Beth, what do you think the impact of rising interest rates will do with cap rates in senior housing?
Well, typically we think that as interest rates go up, cap rates tend to follow the direction of interest rates. And, we've seen the Federal Reserve increase short-term rates fairly, 100 to 50 basis points or so since they've started to shift from a policy of easier monetary policy to a little bit more stricter, tighter monetary policy. And we haven't seen too much of an impact yet on cap rates, but it would be my expectation that we'd start to see cap rates increase. But cap rates have had a good run in terms of compression for seniors housing. Using data from the NIC, which is the National Council of Real Estate Investors Fiduciaries, we've seen, which is based on appraisal type cap rates, we've seen cap rates go from maybe a 7% type rate in 2012 to about 5.25% most recently. So that's been a pretty significant cap rate compression, again, commensurate with the decline that we've seen, for example, in 10-year Treasury rates. And as a result of that, we've also seen some cap rate, the risk premium decline from about 530 basis points back in 2012 to about 250 today. And that's really the result of more capital coming into the sector. Seniors housing is perceived as more of an institutional asset type in which to invest, more so than it was, we'll say, a decade ago. And that's the result of, there's greater knowledge, there's greater understanding, greater transparency in the sector. There's data that we have available. You have, 3 of the largest public REITs have been heavily invested in seniors housing. So it's a much more accepted institutional asset type than it had been. And as a result, that we've seen that cap rate compression and we've seen that risk premium decline.
I see. And most of these REITs that are buying and own these senior housing properties, are they also operating the businesses?
In some cases they are. In some cases they're owners, and they partner with, almost like in a JV structure. There's a structure often used called the RIDEA, R-I-D-E-A, RIDEA structure, that's used by a lot of the public REITs to create more of a joint venture relationship with their operating partners, which allows them to participate in both the ups and the downs in terms of the overall performance of the property, much like you'd see joint venture arrangements between private equity groups and operators.
Yeah, and Beth, we've talked about some of the risk and things to think about in senior housing, but there's also a lot of benefits in this senior housing. So why are institutional investors kind of interested in this sector?
I think for a few reasons. One is that seniors housing, it offers diversification to an overall portfolio, be it a real estate portfolio or a broader portfolio that would include stocks and bonds and income as well. And we've seen that it doesn't necessarily follow the same pro-business cycle that some of the other property types might do that. And part of that, Michael, is because of the fact that some of seniors housing, especially assisted living, is more of a needs-based product. So if your parent or your grandparent falls and needs assistance, you can't really delay that because of where you are in the economic cycle. And because of that, it does offer diversification. It also tends to provide, core plus to value-added type investment returns. It, if you look at the data that we have, again, from NACREIF, and you look at the total investment returns for seniors housing for the last 10 years, they're well above those investment returns that you see in overall other property types. So, for example, in the 10 years ending in the first quarter of 2018, the NACREIF total investment return was 10.5%. And that's versus or compares to a 6.1% total investment return for the overall, what they call the NPI, or the broader product and property type index, which would include multifamily, industrial, office, and retail.
Wow, that is significant. Very significant. Well, Beth, tell us about your national conference coming up in Chicago.
Yeah, so that's exciting. I've been involved in NIC as an organization for, well, we'll just say more than a decade, for a fairly long time. And the conference this year, or last year, 2017, we had over 3,000 attendees attend that conference. This year, the conference is from October 17th to 19th at the Sheraton Grand in Chicago. And I would anticipate that the equal numbers or more will be attending. And there's a few reasons that people attend the conference. It's really become the who's who of seniors housing. So you get the C-suite level of an organization that attends, and that would be both capital providers and capital seekers, equity, debt, developers, owners, operators. So it's a pretty good conference. It's an exhausting conference because there's educational sessions as well as a lot of meetings that take place. But it's really fun and it's worthwhile.
Well, good. Well, I'll try to be there. October 17th is my birthday, so we can celebrate my birthday. That'll be fun.
Sounds great.
All right. Well, Beth, thanks for joining us. Great information as usual. Thank you for being with us.
Thank you for having me.
All
Bye,
right.
everyone.
Thank you. Well, stay tuned. We're going to have a view of the market from a commercial broker who every second of the day works in the senior housing field. So stay with us. I'm Michael Bull. This is America's Commercial Real Estate Show. We'll be right back.